Hey, it's Jon Ciardella with HomeSmart Real Estate. I have a great guest for you today. His name is Moe Ashor. He's with Edge Home Financing. He's going to talk a little bit about the market. And, if you need a good lender, make sure that you go click the link below. This guy,
Mhm.
I found him out of the blue, making my phone calls like you agents should be doing. And we hit it off. And he started talking. And I was like, wow, this guy knows his stuff. I need to get him online here. So, Mo, go ahead and
Mhm.
take it away, man. It's all you.
Well, look, I'm honored and privileged that you chose me to actually make the appearance on your show. So thank you for that. Again, my name is Moe Ashor, and just a quick correction here. I'm actually a mortgage broker, right? I don't
Broker, yes.
work for a lender at all, but I do work personally with over about 60 to 70 lenders, given on the way the market conditions look. Some lenders are closing shop, so but
And
yeah,
uh,
60,
and you
about
can tell
60
us
lenders.
the advantages of using a brokerage over a traditional lender.
Oh, there's the advantages are endless, but let me just list the highlights, right?
Sure.
First and foremost, you're not limited to contacting each lender to try to compare rates and having to sit and talk with a loan officer for about an hour and a half before you can figure out what rate it is that they can offer you at their best price, right?
Right.
For that day, right? And obviously that shifts per day until you actually lock your loan. So when you talk with me, the beautiful part is more times than not, I get paid directly by the lender, right? So it's advantageous to me to make sure that you get the best fit, right? You
Great.
get the best costs, right? With brokers, you always get lower costs. You
Mhm.
always get better rates. Again, because we shop your rates for you. You fill out one application with me, I shop it with all 60 of my lenders. Usually I have about 5 to 7 of them that I usually go for. But if you have a unique situation that has with unique circumstances with the way you get paid or the way you retired recently or something of that nature, I have lenders specifically tailored that can tailor fit a
So, y-
package
so
specifically
you're
for
doing
you.
the work, you're doing the legwork of the buyer, the prospective buyer, instead of them having to go
Exactly.
out and find out. Look, we all have, everybody's got a life. They don't have time to go
Right.
figure out what all these different loan types are. They go to
Exactly.
it's a one-stop shop. They go to you, you're knowledgeable. You say, I think your specific situation would fit these people over here. And you
Absolutely.
have that option to go to that. That's fantastic. That's awesome, Mo.
Amen. Amen. And the beautiful part about it is that you only have to tell your story once, right?
Right.
You're telling it to me. I know who you are, and based on, and we usually build a pretty good relationship throughout the process. I don't end up passing you off to anyone like most lenders do through the processing department, to the underwriting department, and you never hear from the person that you just initially spoke with to begin with. I'm with you till the very end. Why? Actually, it's just to be honest with you, it benefits me the most. I get paid at the very end. I don't
Hmm.
have any incentive to just set the application and push it in and let you go like some lenders do. Like I've worked for a couple lenders that did that, where we take the application, even though we likely know that this person will get denied, they still had an incentive up front just to push the application through. So for
And they're
you
talking
guys,
to you. It's a one point of contact where a lot of lenders pass it off to the
exactly.
processor and then the
Mhm.
underwriter. So it's a one
Yep.
point of contact with you. And correct me if I'm wrong, you're licensed in California, Colorado, Arizona, and Washington State, right?
Yes, and that's as of right now. Me and my company are working on this program that actually gives me the ability to work and process loans on in any state my company is actually licensed in. So that should be
Wow.
in the 40s in regards to how many licensed states I should be able to access within the
That
next month or two.
that's fantastic. You're gonna have to let me know
Yeah,
so I can have you back on. Obviously, I can
I
have you
I
back on before.
definitely will. I
Hey,
definitely will.
so what are you seeing in the rates today? I know that agents want to see what's going on. Since you are all over,
Hmm.
you're well versed in what the rates are doing. Give us,
Right,
obviously we can only say certain stuff on here, folks. You got to understand that. But I know that
right.
buyers out there, they're freaking out. They're wanting to know what's going on. On the other side, too, sellers. I'm telling you, when I talk to a lot of people who are selling, their biggest concern is the reason that they didn't sell was that the interest rates are too high. It's
Right.
scaring buyers away. Are you seeing that
Of
buyers are
course.
still in the market?
Funny enough, now we're starting to see the shift again, right? The rates are
Good.
dropping. The rates have dropped pretty significantly over the last, I would say, month to 2 months, right? Over 1% to 2% right now, right? Like where I was,
Awesome.
the best rate I was able to give a few months ago was 7.5%. Right
Ah,
now, I'm able to see people like lock in at 5.5% or less. And this is
excellent.
without any additional incentives. Now,
Okay.
you do a lot of work on the seller side of the real estate transaction, right?
Yeah. Yeah.
So Yeah, so me and you would work together to help a buyer out and help the seller out to move the home quickly, and also to give the advantage of the buyer, where we could do things like such as a 3-1 or 2-1 rate buy down, temporary buy down, where it gives the buyer the advantage of being able to, instead of coming in at 5.5%, they can come in for the first year at 3.5%, four
See,
and a half
so
percent the second year.
are you folks getting what he's saying here? It's a win-win situation, no matter
Absolutely.
what. And that's how I like to work, and clearly that's how Mo likes to work. If it's not a win-win situation where everybody is happy, now listen, I represent who I represent, either the buyer or the seller, and we all need to honor that. But still, it feels good to have a win-win where everybody comes to the table and they're happy about the situation. The lender did everything they could to get the rates down. They got a good buyer for the seller, and it gets to closing, and everybody's happy and moves
Mhm.
on. Oh, I really like
Mhm.
that. So where you said rates are about 5.5 today?
Roughly. I mean, and keep in mind, this is very
It
specific to,
changes.
like, if you have a specific credit score, with a 10% down payment, and you know what I mean, at around a $450,000 loan amount. So,
Mhm.
I mean, obviously, the variables change as you know, put more of a down payment or less of a down payment, etc., or
Okay.
less of credit or more credit.
Okay.
But
Tell
that's
me
the
about a
beauty of
couple of
talking to me.
yeah. Tell me about a couple of the programs that you have from maybe a jumbo, because I know the jumbo market is actually picking up a little bit now.
Yes, sir.
Down to the first home buyer. Give me a couple of great programs that someone out there will look and go, "Wow, I got to call Mo right now."
Absolutely, absolutely. So, for example, a lot of my jumbo product loans and buyers and clientele that actually go for that specifically are usually either high value earners, as in like they are business owners, like
Hmm.
successful entrepreneurs, and they want to go for that upper echelon of homes that are like, 1.5 mil, 2.5 mil, et cetera. Right now, the
Hmm.
only issue with that is that, that most of them ran into is that they will actually have to claim less exemptions on their tax returns for the year in
Right.
order to qualify for that home. If they actually took advantage of all of the write-offs possible and was able to actually save a lot of money on their taxes, what they end up finding is that they don't qualify for most loans
Yeah.
because we go based off of the net,
Right.
or the on the tax
Right.
returns. Now, the,
Again,
the
that's a give and take, though. If you want to buy the house that you want, you're going to have to just you're
exactly
going to have to take it on the front side, and say, I got to pay
right.
more on the taxes.
Right. Or you can choose to go something like a bank statement loan. Now,
Ah,
there's a trade-off with it. It's small, right? In my opinion, if you look at the big picture, like a bank statement loan, for example, unlike this being at 5.5%, as we were discussing earlier for a conventional jumbo loan, right? You can go and get a bank statement loan at 7.5%. Now,
ah.
7.5% may jump out at a lot of people. They're like, oh, that's a significant jump in interest rate. Okay, but let's look at the numbers,
Hmm.
right? Now, let's say on a $1.5 million loan, that's about $2,000 more a month in
Right.
interest that you're
Hmm.
paying, right? Now, that's about $24,000 a year. Now, that's a significant amount of money that you're paying in additional interest, right? But
Right.
to qualify for a $1.5 million home and a mortgage payment for that, the likelihood is that you're probably showing the IRS that you had to take home roughly about $500,000 or more for that year.
Ah, I see what you're
Yeah,
saying. So is that
yeah,
rather than paying the taxes over the year, you're actually saving money by paying the twenty-four
absolutely.
thousand dollars to do the 7.5%.
Yeah.
That
Yeah,
that makes
you can talk to your tax attorney or your tax accountant, your CPA, and ask them how much do they have to pay in taxes to show
Mhm.
that they've cleared 500,000. But I promise you, it's likely a lot more than $24,000, right?
Yeah. Oh yeah.
So
That's
yeah,
a
and the
great idea.
beautiful exactly, and the beautiful part about it is that, and I'll refer back to your CPA for this part, right?
Mhm.
But you could also write off the interest in most cases.
Right.
So
Right.
it's a win-win. You'd rather put the money back into your own home
Yeah.
or just give it to Uncle Sam where you see nothing of it.
No, wow, that's a great program. Actually, I bet a lot of
Yeah.
people didn't know about that. Tell me a little about some first time buyer. I know there's not a lot of first time buyer programs out
Right.
there, but
Right.
there are some like some teacher programs and service programs and things like that, right?
Right. So I work with a couple of lenders specifically that target the first time home buyer market, that we target it now in a very unique way, especially in this unique market that we're in right now,
Hmm.
where sellers are actually very motivated in helping the buyers
Right.
move the property quickly. So with a little bit of help from a seller concession and a little bit of help from the lender side, where let's say if you do qualify for a 6.5 interest rate, they may go ahead and put you at 7.25. But the beauty of it is that you actually get to walk away from day one without having to worry about paying back the
Right.
3.5% down payment. So and I literally did like 4 loans over the last month and a half where the buyer came in with less than $2,000 to the closing table. One of them actually walked away with $600 that they were able
Whoa.
to deposit in the bank.
That's always a plus.
Because right. And then that is like I said, a lot of work between getting the right rate with the right seller
Mhm.
concessions and everything put together. And all it takes is a couple of hours in a first time home buyers class, and that's all you need.
So you're talking about the seller giving a little bit of concessions. Are we talking about Chaffa
Mhm.
or something a little bit different?
No, this is beyond Chaffa. This is some things. These are a few lenders that I've worked with, and again, this is why it
Yeah,
gives you an advantage to work with a broker, right? Because
right.
I know those specific lenders that do this. So some of them will incentivize themselves by requiring you to stay in the loan for 6 months minimum,
Okay.
and because they'll charge you a percent more, they'll make up their money that way. That
Mhm.
they're incentivizing you with upfront to put towards your down payment,
So
right?
they're giving you 3.5% for your down payment with a higher interest rate of 7.2%. Again,
Mm-hmm.
so these people, the young people right now who have been saving their money and still don't quite have enough to qualify, this helps them because now
Yep.
they're not going into their home what we call house poor, meaning that you're working all
Exactly.
day just to live in your home. Wow, this
Right.
is fantastic, Mo. Holy cow. Well,
Right.
hey, I appreciate having you on. This is why I wanted to have you on because of your knowledge of everything in the market. So, guys, if you want to get a hold of Mo, make sure to click the link below. You know how to get a hold of me as well. My email and everything will be below. And Mo, I'd like to have you on many more times. Would you please come back?
I would love to. I would love to. This was fun. Thank you for having me. I
Awesome.
appreciate you.
Hey, thank you, Mo. All right. So everybody, remember the Ciardella team and the real estate coach, recoach.co at gmail.com. Talk to you tomorrow. Have a great day.